Hi everyone, it's Becky from Good with Money, and I'm going to talk a little bit tonight about inflation. Sorry, I look so tired, but it's pretty late. My children have just gone to bed. But anyway, I wanted to talk about inflation because it's jumped quite significantly from 1.2% last month to 1.6% this month, which just means that prices are rising quite quickly now. And one of the reasons is the bank's been so reluctant to increase interest rates, but it probably will do fairly soon. Most economists think that now we've seen this higher than expected inflation data, we will see an interest rate rise sooner rather than later this year. So, what does all this mean for you? Well, the rise in inflation this time has been driven mostly by an increase in the cost of petrol and the cost of food, and they're things you can't really do much about. Most of us need to eat, and most of us drive. You can maybe drive a little bit less and take public transport because it might be that it does work out cheaper to get the bus instead of driving. Most places now petrol's at 122 pence a litre or whatever it is where you are. With food, the weird thing about food is it's probably some of the imported goods that are being increasing in price, and that's a result of Brexit, of course, because our imports are more expensive now. So something you might want to look at doing is maybe buying more British food and trying to keep it local where you can, because you're less likely to see prices of local goods or British made goods increasing by quite as much as European goods. Um, so that's one option with your food shopping. The other one is to buy less expensive items, so buy less meat, buy more vegetarian food. It's always cheaper. We had lentil pie last night, that was really cheap. And shop for offers. It's so boring and so obvious to just say spend less, buy more bargains, look for the offers, use your vouchers. But when inflation is rising as quickly as it is, it becomes a kind of necessity rather than a choice to shop around and use all of the vouchers and look for offers. Rising inflation isn't a good thing for anyone, whether you're a spender or a saver. If you're a saver, if you've got all your money in cash savings, it's not great because it erodes the value of those savings. And 60% of us in the UK do have a lot of our savings in cash, and haven't ventured into stocks and shares, ISAs, and that kind of thing. Which means we're effectively just paying the banks to look after our money for us, which obviously isn't a very good idea. So probably now is a good time, if you have got savings and cash accounts, to think about moving them to stocks and shares, ISAs. You might feel that's too much risk for you, but your returns are likely to be higher. And just generally, just keep an eye on the returns your savings are making, and just make sure they're always above the rate of inflation. Your own personal rate of inflation might not be the same as the headline rate, um, but most people are now pretty much affected by it. It used to be that younger people were more affected by inflation than older people because they spent more of their income on housing, which was rising quite quickly. But now everybody's affected pretty much the same because we all eat and most of us drive cars. Um, Another thing is if you're a borrower, if you've got a mortgage and it's on a variable rate, you might want to be mindful of the fact that the Bank of England probably will increase rates fairly soon, and that will result in a rise in your mortgage repayments. So there aren't that many good long-term fixes around, good value long-term fixes, but you might consider you would rather fix now than wait until after a base rate rise when interest rates on deals will obviously be even higher. Um, Credit card and personal loan rates haven't really been affected yet, and they may go up, but they tend to be a little bit less sensitive to what's happening to the rest of the economy because the lenders are competing between themselves for your credit cards and loans. So you might not need to worry too much then, but do keep an eye on the APRs even so. And yeah, just keep an eye on your money and the value of it, and think really hard before spending on things you don't necessarily need at the moment, because saving is definitely better than spending, if you're doing anything at all with your money or thinking about where to put it. And yeah, we'll see what's happening to inflation next month because the ONS publishes its data monthly. It's probably going to have gone up again, but who knows, if the bank decides to increase interest rates this month, maybe that will curb inflation for now. Anyway, don't worry about it too much, and I'll see you for the next video. Thanks, bye.